mean, the news media has been pointing to the launch of these two Bitcoin futures ETFs last week. How much is that spurring what we've seen versus things like concerns around inflation when you have somebody like Jack Dorsey coming out and tweeting about hyperinflation, for example?
Yeah, so I think it's absolutely a confluence of the both. Right, the Bitcoin futures ETF kind of clears a pathway towards the approval of a spot ETF, which is insanely bullish. It shows that the SEC is willing to work with many new financial instruments that will help more investors get exposure to crypto, which is, of course, important. And when you add that into the larger macro environment of hyperinflation, which people are going to start feeling as supply shocks come more and more, this is all insanely bullish, and it's a great time to be investing in crypto.
So where are you investing in crypto? I mean, you're leading the firm's new crypto fund. How are you, I guess, parsing the different aspects of the cryptocurrency space right now to decide where to put money to work?
Yeah, so we look at the entire industry at both the centralized offerings as well as the decentralized protocol-based offerings. Inside of our portfolio, we have many exchanges such as Kraken, FTX. These are obviously businesses that are going to continue benefiting from the run-up in crypto to come, but also decentralized core infrastructure. When you look at lots of layer one smart contract solutions, they should probably be part of a balanced crypto portfolio, as well as things that are going to power the new generation of crypto products on the internet, such as decentralized cloud compute, things like data API systems to track provenance of certain types of information and NFT on-chain. All of these things are places that we want to be putting our capital, but right now we're still very much in the early stages, so it still is mostly infrastructure and then a smattering of decentralized finance products.
Yeah, so on a day where we have MasterCard announcing that any bank or merchant on its network is soon going to be able to offer crypto services, it's partnering with BAKKT, I believe. That speaks to the evolution of Bitcoin as an asset class right now. Where does this go from here, and how does it speak to the regulatory environment that's going to take shape?
So a clear regulatory environment is, of course, a positive for all aspects of the industry. While it's still not entirely clear how things are going to flesh out, the approval of the futures ETF and Gensler kind of saying, hey, crypto is here to stay, makes it such that more and more of these groups like MasterCard feel comfortable coming into the fray. What we think is going to happen is that in the same way, 20 years ago, fast forward to today, every company is an internet company. If we look 10, 15 years in the future, most companies will integrate aspects of blockchain or crypto. So it's just really important across the board that all of these kind of legacy groups figure out how their product offerings fit into a more decentralized world.
Yeah, I mean, I feel like each day it's a new coin that is popping up and garnering headlines. I mean, Shiba Inu was over the weekend for a major pop as well. I mean, are we going to see some sort of consolidation or shakeout here, or is it still the Wild West in terms of trying to figure out which cryptocurrency asset is going to ultimately dominate?
Yeah, so I don't think it's the Wild West. I think if you break the market down into certain verticals, right, you have your core decentralized store of value like Bitcoin. Then you have your smart contract solution tokens such as Ethereum, Solana, Avalanche. Shiba, I guess, would fit into a category that we call meme coins. There's a variety of decentralized finance tokens as well, such as things like Uniswap, Compound, Aave. If you look at these verticals, you tend to see some level of consolidation or capital flows between them. So, if Shiba pumps, it may be at the expense of some other type of meme coin. But generally, we feel that the market is differentiated enough where not everything is continuing to move in tandem.